Hi guys, it's Stock Curry, and over the past few days we've had some excellent jobs data, yet the market has continued to drop due to some warnings from the Federal Reserve. In today's video, I'll discuss those warnings and what they mean for the future of the stock market, so let's get into it! Job openings in July topped estimates at 11.2 million versus only 10.3 million expected. That was nearly double the total pool of available workers, which is only 5.67 million. So if the jobs data is so good, after all, the president and the Fed have pointed to jobs data as being one of the reasons why we're not in a recession, then why does the stock market continue to go down? Well, the problem with jobs data being extremely good is that it gives the Fed more room to raise interest rates without causing a significant decline in the economy. People had expected the Fed to start lowering interest rates in 2023, but Fed President John Williams pushed back and said, do not expect a rate cut next year. John Williams said he expects interest rates to continue higher and to remain at those levels until inflation is subdued. Now, while President Williams did not give a specific place where he would like to see rates go, Fed President Mester did. Mester sees the benchmark rate above 4% and sees no cuts through the end of 2023. President Mester also warned that the rate increases will slow economic growth to running well below 2% annualized GDP. Of course, the current annualized GDP is negative and has been for the past 2 quarters, which is why we are officially in a paper recession. But because the job market is so strong, an official recession has not yet been declared. And that gives the Fed a lot of breathing room. They can continue to raise interest rates at a significantly higher and faster pace in order to bring inflation down. Because as they raise interest rates, it will hurt the job market. But with there being twice as many job openings as there are available workers, the Fed has a lot of room to raise interest rates significantly and even go Paul Volcker, like Jerome Powell talked about on Friday, in order to bring inflation down without affecting the U.S. economy so bad that we enter a massive recession. At least that's the goal. Unfortunately, as interest rates continue to rise, this is going to push company earnings down, and as company earnings continue to decline, they're going to be forced to do layoffs in order to cut back on costs. And that's exactly what we see happening. Bed Bath & Beyond announces store closures, layoffs, and new financing to try to fix its struggling business. And fintech firm Klarna's losses have tripled after attempting an aggressive U.S. expansion and now being forced to do mass layoffs. Snap also announced that they would lay off 20% of their staff. Now, while layoffs are bad for the economy and the overall job market, layoffs are good for company earnings because it significantly reduces a company's costs. As a result, Snap shares were up over 8% on Wednesday. And the economy continues to show signs of a slowdown as HP CEO sees signs that commercial PC demand is starting to slow down. And it's not just commercial PC demand that's slowing down, retail PC demand is slowing down as well. Best Buy's quarterly sales dropped as inflation-worry consumers pulled back on spending. In fact, Best Buy sales dropped about 13% in Q2. Best Buy had already cut its full-year forecast, warning about a lowering of profits. Yet that warning was not enough to keep Best Buy shares from rising. The stock was down over 5% on Wednesday. Meanwhile, cybersecurity spending is rising as CrowdStrike earnings and guidance beat estimates. Unfortunately, investors were not pleased enough with those good earnings, and the stock was down over 5% on Wednesday. EV spending also continues to rise as ChargePoint's revenue topped estimates, although they did report a loss for Q2. Despite the loss in earnings, the rise in revenue was impressive and ChargePoint shares were up over 12% on Wednesday. Unfortunately, another online retailer, Chewy, lowered their year-end forecast, and the stock was down over 11% after hours on Tuesday, although it only finished the day down 8% on Wednesday. So what does all of this mean for the future of the stock market? Well, ultimately, the stock market is going to trade based upon company earnings, or more specifically, companies' forward expected earnings. And unfortunately, as retailers continue to cut back on spending, as layoffs continue to mount, consumers are spending less and less money, and this is having a significant negative effect on stocks, especially consumer stocks. As a result, the stock market has continued to decline. It does now look like the rise that we saw in July and the first half of August was just a bear market relief rally and was not the start of a new bull run. The stock market is now significantly off of those highs, and in fact, the stock market closed down for the month of August. The stock market continues to drop, and September is historically one of the worst months of the year for the stock market. If that history repeats itself, I do expect the stock market to continue to decline as the stock market focuses on the Federal Reserve continuously rising interest rates and inflation that is stubbornly sticking around, all of which is causing company earnings to continue to decline and layoffs to mount. It looks like the honeymoon is over and the stock market is back to bear market. So what am I doing to make money from all of this? Well, earlier today, I opened a SPY, S-P-Y, that is an S&P 500 ETF put option, and I am up 45% on it today alone. Now, if you want to know everything I'm buying and selling so that you can get in on these trades too, you only have a few hours left to sign up for the VIP Discord before I close signups. You only have a few hours left to lock in a monthly rate of $25 a month. For those of you who are wondering, you are charged on the day of the month you sign up. So if you sign up today, you'll be charged on the last day of the month every single month. You're not going to get a charge today and then another charge on September 1st. I also wanted to let you know that we will be reopening the Discord in about a month, but when we reopen it, the rates are going to go up significantly, and we are switching to an application process, so you will have to apply to get in. So if you want to guarantee your spot into the Discord, and at a rate of only $25 a month, which will never go up, you need to make sure you sign up before the end of the day on Wednesday. If you're interested in that, you can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. Alright, I hope you enjoyed this video and got a lot out of it. Don't forget to hit the like button and subscribe. And if you're on YouTube, click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.